Welcome to TradeTheMBI.com. This is John. This report is for the 12th. Well, yesterday, look at this. We made new highs, at least for the ES, and on incredibly narrow and very slow action. We look at our overall, we set up into what would be a short configuration if we were starting to dip with our shakeout a little bit further. We're getting some softening on it, but we're just holding up in price. Shorts are starting to increase again, which we know the last time that happened, it set themselves up for this run right here. So there you have that. Not overbought and not oversold. So we're just chugging along, doing that slow up grind with very little volatility. Very little. The NQ finally pushing up there, making its new high. A little bit softer readings. So this is something we've noticed. It's significantly different. Shorts have been much more active, but they're unable to move price. So if you're blowing your entire wad to short everything and selling, there are plenty of people buying it, and nobody looks to be running. And why should you? If the euro keeps climbing like this, there's no reason to get out of equities in America, because that is going to improve their numbers. This relief rally for treasuries here, not going to last, so not really relevant at this particular point. It's going to be an interesting one, because we're going to have to be watching in the next few months inflation numbers. And the interesting thing is the real effect that the disaster relief, it will have a significant boost later part of the year, because that money is getting spent now and is going to be flooding into the system. So we're going to see what inflation does and how much of a general startle panic that causes when it comes to oil, gold, all the commodities. And I think that will have a very intriguing impact on people's perception of the market and whether or not it really is overvalued, which I don't think it is at this particular point when you take into account the potential of significant inflationary move. I know there's going to be a lot of criticism of the Fed raising rates within a general softness, but I think that despite what they claim inflation is, it's much higher than that. But that's a whole different story. Oil. Yeah. And gold. Gold is going to start to realize that we see that this was a bit oversold and overdone, though this one will probably fade a little bit, may get a little more juice out of it before it does. Sometimes they get a little behind on their retraces. It gets a little extended one direction and then it comes back a little bit. But sometimes with the commodities, they could just right back up in place without that immediate retrace. And here, this was the day's action. It started off weak, and then all of a sudden we just started to catch a little bit of juice. And then we got overextended here, and we're coming right back to the 50%. So you go up 4 or 5 points and then come back 2 or 3 points and do it all over again, and you really have gone mostly nowhere. But hey, it made a new high, so we're still stuck right around that 25.50, which was the full range of the target for the most part. So that we're kind of stuck here. Not a surprise, because I haven't seen any indication of a significant range one. I mean, before we had real significant push readings, and some people will just automatically create a target based on a Fibonacci or projection that way. It's not the way I've ever done it, because it doesn't mean anything. You have to have an impetus where there are buyers and a set mode that is indicating that you're about to see some type of increased activity, either to the downside or upside. And in this particular case, we don't have that yet. So go with a narrow range. That's all you can do at this particular point. Not anything else to add on that. As always, though, trade well. Look for me and the charts that I put up on the Skype chat. Ciao for now.